I'm really interested to know, is there any form of a trend that you foresee? Maybe this year, do you see the Chinese equities outperforming?
I mean, every year towards the end of the year, right, people will be asking about things like Christmas rally, whether that happens or not, or Santa Claus rally, right? And then when the New Year starts, people will be wondering, is there a Chinese New Year rally? So I think for this year, the Dragon Year, we saw the Chinese index go up by, I think it's a few percentage points, right, before and after Chinese New Year. So this year, I'm not sure whether there'll be a Chinese New Year rally or not.
Hi everyone, welcome to the show. This is the podcast where we explore market trends and trading opportunities to help you trade smarter. My name is Jin Rong, market strategist at IG Singapore, and I'll be your host today. I'm excited to guide you through what promises to be an insightful discussion about seasonal trading trends, especially as we approach one of the most vibrant times of the year, which is the Chinese New Year. Today, we will be diving into the trading opportunities tied to the Chinese New Year, which is one of the most fascinating times for market activity. And joining me here is our exceptional guest. He is Alvin Lee, IG Singapore Premium Client Manager, and he has been a seasoned trader with a decade of experience navigating seasonal trends. Welcome, Alvin.
Thank you, Jin Rong, for having me on the show.
Thanks for joining me on the show. Now, we know that Chinese New Year is near the corner, right? And, apart from it being a festive season of family visiting, collecting ang paos, visiting relatives. As traders, sometimes we also wonder what are some of the opportunities that we can actually derive from this festive season. I'm really interested to know, is there any form of a trend that you foresee? Maybe this year, do you see the Chinese equities outperforming?
I mean, every year towards the end of the year, right, people will be asking about things like Christmas rally, whether that happens or not, or Santa Claus rally, right? And then when the New Year starts, people will be wondering, is there a Chinese New Year rally? So I think for this year, the Dragon Year, we saw the Chinese index go up by, I think it's a few percentage points, right? Before and after Chinese New Year. So this year, I'm not sure whether there'll be a Chinese New Year rally or not. Maybe you can share some insights on that.
Yeah, sure. So I think Dragon Year has been very kind to all of us. As you mentioned, I think we saw sort of a pre-rally for the Chinese New Year season in the Hang Seng Index and the CSI 300 this year. But, I went to look at past historical data since 2005 for the CSI 300. Generally, sentiments, that seems to be well supported in the lead up to Chinese New Year, around 1 week before. The average return seems to be good. The positive rate seems to be higher than average as well. But of course, thereafter, once the Chinese New Year festive season ends, generally, things could be quieter. We see kind of a subdued performance being delivered by the CSI 300. And I think this trend seems to be replicated in the Hang Seng Index as well. If you look at the average return, since around 1965. So quite interesting on that.
I think just before Chinese New Year starts, normally those consumer staple stocks like Sheng Siong, those other supermarkets, more of those F&B groups maybe that cater towards festivities like eating and when people take transport to their friends and family's place, right? Grab, ComfortDelGro, for example. Are there any interesting sectors that clients should be looking at?
Yeah, I think you nailed down some of these sectors which, every time when we approach the Chinese New Year season, people will be heading towards Sheng Siong to do their grocery shopping, buying food. So sometimes, everyone will be talking about Sheng Siong, DFI Retail, some of those Singapore-listed consumer staplers kind of a stock. And of course, you also nailed down the transportation. I think generally when you go family visiting, ComfortDelGro, that's one of the stocks to watch as well in terms of the transportations. Of course, apart from the local scales, I think if we were to widen our perspective, generally e-commerce stocks, when we talk about e-commerce stocks, especially in China, Alibaba, JD.com, these are some of the stocks that comes to mind. And of course, generally, when we look at past historical performance for these stocks, it tends to be slightly more positive. Right. Of course, not 100% for sure, but there's some form of a positive sentiments in the lead up to many of those e-commerce counters. But of course, I think there's no sure win kind of a way. I think generally, when people expected that there will be some form of a festive spending for many of those e-commerce, consumer staples. Generally, markets may look at the year-on-year kind of a comparison, whether this year more people are
It's always better.
yes, you are right, whether it's more than last year, whether consumer spending or sentiments are holding up much better. So I think in a way that's also what the markets wants to look out for.
Yeah. But typically are the markets more like forward-looking? Because before CNY starts, right, the market really kind of expect the consumer demand to pick up during these periods, right? So do we see these shares like go up pre-CNY, post-CNY? How long does the effect last for actually?
Yeah, I think that's a great question. I think everyone wants to see whether you can buy before the Chinese New Year and then just sell straight after that to rip off that very big profit. Yeah, some free ang pao for there for you to take. Yeah, I think that's a very interesting question. But of course, I think we does look at some of the more popular counters in terms of China Airlines, for example, in terms of Alibaba, e-commerce stocks, for example. There isn't too much of a clear trend where there's this free ang pao for you to take before that Chinese New Year festive season. So I think when markets look at it, I think generally people understand that there will be this kind of a surge during this festive period. Thereafter, things may start to taper down a little bit. But when people look at the fundamentals of the companies, generally they may look at the average performance across the year, or generally, like I mentioned, they may look at the year-on-year kind of a comparison. For example, when you look at Alibaba, the performance will kind of determine whether consumer spending, consumer sentiments are holding up, and that also offers some of a good gauge of the broader economic fundamentals for China itself. Yeah, so I think that's something kind of very interesting to watch. Of course, I mean, Chinese New Year we do have some form of gambling, right?
Gambling as well.
Gambling as well. So Singapore listing
Singapore.
Yes, I think you're right. Genting Singapore, generally there could see some form of an influx of visitors. So that could also be something that we can put under our watch list. There could be some volatility there for traders, to tap on any form of volatility for quick profit.
I think I believe before and after CNY, these kind of stocks will have increased volatility, right? Because more people are active in the markets, there's more demand and supply, so more movements. So I think it's there's a lot of trading opportunities for different counters, right, during CNY periods. How about banks actually? Because during CNY, people go to the banks to withdraw money for ang pao, right? So some people are worried that there might be like a run on the bank kind of thing. Does this actually impact the stock prices?
Yeah,
during CNY?
I think that's a good question. But generally, I mean, when banks, of course, they have to issue out more sort of a cash. I mean, people withdraw more. But I think in a way, local banks, they kind of expected that. So, and they also have that form of excess capital to actually cater to all of these form of withdrawal. Not just in terms of Singapore banks. If you look at China as a whole, this is a very big season for the Chinese population. So generally, businesses, they may close their books for a temporary break, or consumers, they want to sort of withdraw more cash. So the demand usually for some of those cash, or for Chinese yuan in particular, may sort of see some form of a upward shift. But of course, we know that this is temporary, and sometimes the Chinese government may sort of step in to offer some form of liquidity just to avoid excessive or like unnecessarily changes in terms of the exchange rate. So I think overall, there are some form of coping mechanism for all of that. So no doubt there will still be some volatility, but in terms of the banks, like you mentioned, generally there's no reason to sort of panic just in terms of everyone withdrawing their cash. And China economy as a whole, the government will intervene to really stabilize the economy as a whole.
Yes. I mean, now they've already touched on these kind of shares as well as industries, right? How about the currency for the Chinese yuan? Because it's mostly controlled within a certain band by the Chinese government, right? So does this kind of like deposits, withdrawals, money flows, does it affect the yuan a lot? Would there be higher volatility? And does it normally spike up or down?
Yeah, I think that's another great question. I think generally there isn't a very clear trend in terms of the Chinese yen. So likewise, there's no pattern to it because like I mentioned, sometimes the government may step in to offer that kind of liquidity to cope with that increased demand. That's for the onshore yen. For the offshore one, generally, there could be some volatility, but there isn't sort of a clear consistent pattern, because I think the general understanding is that yes, it's kind of a seasonal thing, and after that, things should go back to normal, and that's where the real fundamentals really kind of matter in driving some of the levels for the Chinese yen itself.
Yeah.
Yes.
Yeah.
So,
But I'm sure prices of like gold, for example, these are not so much controlled by the government. And then during CNY, people like to give gold as a sign of, prosperity, fortune.
yeah, like to
Yeah.
to the elderly.
Yeah,
Gold.
correct, jewelry and all. So gold prices do get impacted by these kind of festivals.
Probably somewhat. I think generally demand may increase for gold, but I wouldn't say it's so huge such that it can trigger a significant upside in that sense. Yeah, of course. People like to buy gold to give to their relative and all that, so there will be an increased demand. But of course, we have to consider there are many other factors that will drive gold prices. And if you look at central bank's demand, if you look at some of the safe haven flows. If you look at whether money managers are positioning, whether they are sort of accumulating gold in that sense for the longer term investment. So yeah, those could be some of the drivers that could have more sustaining impact on the gold prices. Or for example, if we talk about the stronger US dollar, or higher bond yield, so those could be the key driver. But no doubt, during this period, it's good to watch for any form of a volatility, or potentially some form of a short-term upside in terms of gold prices. But of course, there isn't so much of a clear trend that can be attributed to the Chinese New Year season.
I think this year is interesting because recently we touched all-time highs for gold, right? And then inflation is a big thing now. Interest rates is a big thing as well. So I guess the question is, with all this in play, right? This year, will we see like gold even higher or not? Or are we like due for some kind of pullback? Because it's been, in such a strong bullish momentum for months now. Yeah. So do you see some form of profit taking or high interest rates causing gold prices to come down somewhat?
At IG, we know that timing and precision are everything in trading. That's why our platform is simple to use, fast, and packed with tools to help you trade. Whether you're trading indices, Forex, or other markets, IG gives you the flexibility to act when it matters most. Opening an account is quick and straightforward. Start trading today at IG.com.
Yeah, I think that's a good question. I mean, gold prices have been so high, right? So for those people that want to buy gold to give their elderly, wow, I think they must be sweating, They really got to fork out more to afford that piece of jewelry. And yes, I think gold prices, as I mentioned, it has been driven by a lot of some of the factors that I mentioned. Probably some safe haven flows in light of a lot of geopolitical tensions. But of course, we are seeing some form of a rollover recently. It does seem that it could be due for some sort of a profit taking just because things are high, prices are high, and now we sort of have a hawkish Fed, right? And that is really keeping the US dollar on the upside. And we know that comes on an inverse relationship with gold prices in general. We have US Treasury yields, 10-year yields above 4.5%. That has been triggering, some form of a panic across markets. And I think that will create that panic for gold prices as well. Because we have to understand that, gold prices are not are non-yielding. I mean, you doesn't gain any sort of dividends from holding, the yellow metal. So in a way, when you have some form of a higher bond use, so people will start to wonder, the opportunity cost of holding gold, right, in that sense, is actually lower. So in a way, there's this inverse relationship there as well. So I think some of all these factors are really triggering gold prices to sort of reverse some of its direction. But of course, what we can watch out for into 2025 is, now markets have really sort of rushed to price in some of the hawkish expectations for the Fed. Markets have sort of get accustomed that the Fed will cut by 2 times, 225 basis point rate cut. So once the expectation adjusts, how much more hawkish can you really get? That's something that we can ponder because, once that is really priced in, then, that offer room for surprise on the other side. Where, if the Fed will have to be forced to turn more dovish, then that could create some form of attraction for gold prices. So I think we can sort of go with the trend. I think we can still argue that probably the recent downside could still be a retracement within the broader upward trend. I think of course one indicator we can look out for is that 200-day moving average. So I think there is this saying that says nothing good ever happens when the price is below the 200-day moving average. I think that is a trend line that
It's a genuine guideline to tell whether the market's in the uptrend or downtrend, right?
yes, you're right. So I think 200-day, of course, people look at 50-day, 100-day, but I think the 200-day moving average tends to be more well respected in that sense, not just by retail, but probably also by some institutional players as well that are holding for the longer. Yeah. So of course we can keep a lookout for that. But for now, it does seem that I would still argue that it could be that recent healthy retracement for potentially more upside into 2025. Yes.
I think back to the the Chinese stock market, Hong Kong stock markets, right? A lot of clients ask me actually, like last year was a dragon year, right? There was a lot of hopes for the Chinese markets recovering like post-COVID, yeah. So I think in 2024, the Chinese central bank government tried many times to like prop up the economy, right? So the market actually rallied for a good maybe 1-2 weeks, but it never really lasted. People still lose confidence and the sentiment is still quite poor for Asian equities in general. So the rally doesn't really last. I think it was 3 or 4 times this year, right? In December, we had one recently as well that only lasted for like 1 week. Then the next week, it just came back down already, right? Yeah. So like this year, the year of the snake, right? Do you think that the Chinese government can actually come up with any more positive surprises to create a sustained positive move up for the next few years?
Yeah, I mean, that's what I hope for. And I think probably everybody will be hoping for. I think over the past year, everyone has been carrying on to that hope. And I think you mentioned it very well, like, we have been seeing this as sputtering kind of a rally, only to fizzle off. So, upcoming Chinese New Year, I think the key element that people will be watching out for is the consumer spending. So we know that the Chinese authorities really want to shift its growth towards higher quality consumer spending. They have been focusing on that. They wanted to come up with policies to support that. Therefore, but looking at the various monetary measures that they have done, so they offer a lot of liquidity for the markets through interest rate cuts, through cuts to its reserve requirement ratio, even reducing some of the existing mortgage rate just to really spur some form of a lending, some form of a spending. But I think, as you mentioned, time again and again, we've seen a short spike, and then after all, the momentum just kind of fizzle off. So it has happened 3 times before, so everyone is wondering, they are starting to sort of lose confidence in terms of the Chinese equities. We can see it from its very low valuation. You can say it's a bargain buy, but of course, it does also reflect the market doesn't have so much confidence on its recovery. And so into this next year, I think a lot of attention will be on the fiscal policy specifics. So I think over the past few years, we have seen a lot on the monetary side. All of the interest rate cuts that offer a lot of liquidity, but consumer confidence is still at this record low, hovering around the record low. Business are kind of wary. They do not really want to take up borrowing because of geopolitical tensions with the US and the West. That's really refraining them from investing too much. They're a bit cautious. So that has also been sort of weighing on the broader Chinese economy. So into this next year, I think Chinese authorities have given the market some hopes again. We have seen late last year, they have given market some hopes again that they will do something. They have kind of shifted some of their policy tone. So that will be something that we will be watching out for. I think markets will want to see how they will actually counter the US trade restrictions in that sense. And of course, the amount of fiscal stimulus may kind of matter. I think if you are looking at probably 2 to 4 trillion, that could still somewhat be underwhelming, I would say. I think back in 2008, what we have seen is 4 trillion. 4 trillion net stimulus into the economy. I think markets will want something similar to that kind of a scale to be reassured that things are doing somewhat of a turnaround. So that will be something we will be looking out for. And of course, we know that will only come after we know what Trump wants to do with the trade economic restrictions. So that will be something that we can keep a look at on potentially after Chinese New Year. Bringing back to the Chinese New Year kind of a theme, I think for Singapore, generally as we talk about, I believe some of the retail stores, the travel companies, not just in terms of transportation, but also the airlines. So I think Singapore Airlines, yes, you are right. And generally, there could be somewhat of a higher demand. If you look across towards China. That will be, some of the China airlines as well. But of course, when we look at the historical performance, not so much of a clear trend yet.
Yeah.
Probably 50-50. 50-50 that the share price will gain, 50-50 it could see a loss. So I think overall, there could be some near-term volatility, but over the longer term, I think ultimately it still boils down to the broader macroeconomic fundamentals and the company's financial performance.
Yeah. So I think there will be plenty of trading opportunities in the market. Like you said, it's 50-50, right? You can't pick the correct shares unless you're very good at stock picking, right? You can't really guess which shares will go up a lot, which will come down a lot. But I guess you have to focus a lot on risk management for your account to make sure if you're trading, you wouldn't lose more than how much you plan to lose on a trade, right?
So Alvin, how do you actually manage your risk in terms of trading?
I think for trading, you have to firstly determine what's your maximum amount of capital you are willing to lose in the market, right? And based on that figure, you choose the appropriate leverage to count how much is the maximum exposure you want to go into a certain counter, a certain market, and make sure just count everything properly. So that when the market moves against you, right, you're never surprised by the P&L on your account. Yeah. Of course, if it's positive, it'll be very good, right?
Yeah.
But I don't want to wake up one day and see a huge red figure on your account and get too negatively impacted by it. Yeah.
In general, do you only expose your portfolio to maybe 3 or 4 trades, or you limit it to maybe 1 or 2? Is there optimal numbers that we are looking at here?
I think for trading, unlike investing, right, where you should diversify, trading can be, or rather it should be more focused on the team that you're playing for that period. For example, let's say CNY, you think the market is going to go up for gold, right? So you focus mainly on gold. I say this because if you trade too many things, gold, Hang Seng, JD, Alibaba, you might make money on one trade but lose on the other 2 trades, right? It's counterproductive. Yeah, so it's better to focus on one market and then choose a strategy to execute your views on the market and just focus on that instead of splitting across too many eggs in one basket.
Yeah.
Yeah.
Okay. So is there an optimal exposure that you have for a certain trade? Do you limit it to maybe 2% of your portfolio per trade?
Yeah.
Do you have such a system, or do your clients have such a system in general?
Different clients have different ways of managing their risk. So some people, they put a lot of capital in their account, right? But it's purely as a buffer. So they don't trade very big sizes. But there are some who put lesser funds in their account, but they know that they have more funds in their bank account to stand by to support those trades, right? So there's no fixed ratio or percentage per se. It's how much you're comfortable with the size of the trades that you want to do and what's your financial standing, basically. Yeah. Most importantly, you don't want to feel so negatively affected by the trades because it will make you make wrong decisions in trading, especially in fast-moving markets, right?
Yeah.
The market is open, you will mess with your mind and make you take the wrong decisions sometimes, emotional decisions.
So I think overexposure in a way can be a risk itself. It adds on to the risk. I mean, you have so many trades, and some of the trades could be sort of related with each other. For example, both could be risk sensitive.
Yeah.
So when the risk environment really comes down, then both will actually, so your losses could be magnified in that sense across that 2 trades. So that's a very good point. So try to avoid sort of overexposure. I also want to ask you, in terms of risk management, IG does offer this guaranteed stop loss.
Yep.
So do your clients use that, or do you advise them to use that? How can they actually do so?
I mean, over the months, there's been a good pickup in the number of clients who are trading using guaranteed stops, right? Because of the volatility on the markets. Like last year, there was the US elections. Feds were cutting interest rates on multiple occasions, right? So it's really anybody's guess how the market will behave when such a major change happens in the economy, fundamentally, right? So the market can really get up or down by a big magnitude. So guaranteed stops actually really helps to protect the client's accounts. They can really trade for peace of mind. You wake up one day and see your account in negative balance, you owe the broker money, so that's not a good feeling, right? So you can trade for peace of mind. Is buying insurance on your trades at a very low cost. And the best part is you're only paying for the insurance when it is triggered. If you still close everything manually, right, there's no cost to the insurance. Yeah. So to the clients, I mean, their perspective is like it's a win-win. Yeah. They get the protection and only pay for it when they use it.
Yep.
Yeah. So it's very efficient for them.
So there's like really a safety net where you can just go and sleep with a peace of mind, and you know that once that level is reached, it will be closed off without you having to manually intervene in it. So I think that's a good way. I mean, risk management has really been a key element in terms of trade, because I think one of the philosophies that when you are trading, you should always survive, to live for another day in a way, to fight like this. Fight another size, yeah. So you can never be 100% right. Yeah. Sometimes you will have a series of wrong trades, but you got to make sure that, you are able to weather through, sometimes of those consecutive losses, especially.
So, Junrong, Year of the Dragon was supposed to be a very hot year for everybody, right? Year of the Dragon, a lot of focus on Dragon Year, right? How has the market actually performed this year? And was it like a letdown, or how has it behaved this year?
Right, so year 2025, as we head into the year of the snake, we know that it could be another volatile year for Chinese markets, especially with that Trump 2.0 that are coming out in January. So what are your clients' perspective on that? I know that there are some kind of disappointment in Chinese equities over the past few years. Are they feeling hopeful for a turnaround?
I think for those investors and traders who have been watching the Chinese markets, right, they've been through a giant major roller coaster ride. Because during COVID period, you see all the Chinese equities basically go to the moon, right? It skyrocketed, and then for the next 2 years, it kind of slowly dwindled down and died off. People lost money then because it's a leverage trade. And this year, I think there is a bit of expectations that there could be a rebound in the Chinese economy. But I guess a lot depends on how much confidence they have in the Chinese government. Because for 2024, they announced many stimulus packages, a lot of promises, but nothing much really followed through. Yeah. So it basically spiked up and then it came back down. I think this year, the same kind of expectations is still there, but they're so used to the disappointment, right? So it's not that high as well.
So they're numb already.
In a way, yes, they're numb already.
Are they still positioned well in the Chinese equities, or do you see the positioning actually, fall to its?
Yeah, because now it's so low already, right? And sentiment is so low. I think people are more willing to enter at this low price point. Yeah, so they don't mind accumulating some positions at these levels, but they're not really holding on too long to these trades because based on past experience, yes, rally for a short while and come back down, right? So they're trading kind of like a intra-week or intra-month kind of trade, whereby they don't hold it for such a long time. Yeah.
So I think there are still some form of a discount there, looking at that low valuation, not just across global peers, but within historical average. Chinese equities have always sort of been that discount play over the past, that value play over the past few years. So I think everyone is just really watching for that catalyst, that policy-driven stimulus, whether it can meet market expectations for that, turnaround. I think that's something to watch in the year of this snake.
Because there's been disappointed so many times, right? They keep selling off the moment there's a rally. So it's very hard for you to continue the rally if people keep selling off. Yeah. So I think for 2025, there must be some form of a catalyst, right? That happens in the market, some new announcement, some very big jumbo package that comes out from them, right? For this rally to be sustained. Yeah. Are there any such events in 2025?
Yeah, but I think there has been a lot of hopes revolving around that. I think Chinese authorities have also laid out a very forceful view. If you look at the previous Politburo meeting, they have laid out a very forceful view that they are going to come in sort of stronger in terms of policy stimulus. They'll stick to that sort of loose monetary policy stance. But I think a lot of it is China has been on this reactionary policy path. They want to see what US actually do before they sort of deliver that scale and that specific measures to the specific counter that could come under a US crosshair. So I think there's still a lot of uncertainty there. We need more policy clarity coming from US President Trump before we see Chinese authorities reacting in that sense. So I think we may expect some form of support coming in, but I think the question now is whether those support that comes in, is it just to mitigate the effect? Or can it really drive somewhat of a stronger economic recovery for the Chinese economy? And I think one factor that we can keep a lookout for will be their GDP price target that they may GDP target that they may set for 2025. So that will give us sort of an inkling and something to watch for the year of this next.
Actually, one trend I noticed, right? Last year towards this year, 2025, right? There's been an increase in number of people traveling to China for holidays and whatnot, right? So I think tourism is getting stronger in China. How dependent is China on tourism? I mean, mostly it's trade related, right? They be exported to US and the whole world basically. But tourism, if more people travel to China during the CNY holidays, would there be any increase in demand for Chinese equities?
Generally, when you look at Chinese economy, it's still very much trade driven. So even though, they has been trying to shift towards, more high-tech manufacturing, more consumer-driven kind of a growth, it has been playing out somewhat, but I think it will take time to materialize. I think they are trying to restructure the whole economy. It will take, many more years. For now, it is still very much dependent a bit on external demand, such as some of the exports, and with those trade restrictions coming in, those could be some of the weighing factors in terms of growth itself. And of course, with tourism, I think a lot of it has been revolving around that weak yen. I think that surge in tourists, potentially around Chinese New Year, we could see more people traveling to China as well because of that weaker yen. I think that's also kind of reflect the accommodative policy stance that China could potentially take into 2025. Of course, there are also room that they could weaken their currency further moving forward to counter any form of trade tariff. I think those will be something to watch in 2025 as well. Yeah. So this has been an insightful conversation. I think we explored how markets behave during Chinese New Year, some of the sectors to watch, and the importance of preparation and risk management. And of course, huge thanks to Alvin for sharing your expertise.
Thank you, Gino.
Thank you for tuning in to this episode. And we hope you find today's discussion insightful as we explore the unique trading opportunities around Chinese New Year, including which sectors to watch, currency trends, and strategies to navigate risk. And remember, trading smarter starts with the right tools. And at IG, we are here to help you stay ahead of the curve. Don't forget to subscribe to IG for more expert insights and visit IG.com to explore our platform. Until next time, happy trading and have a prosperous Chinese New Year.